So far, we've covered financial statements, normalization adjustments, how to evaluate and compare that data to prior years and the industry, and how to prepare a very detailed set of projected financial statements, including cash flows. So now we're ready to move on to the valuation section, where you control the variables that feed into each valuation method. The valuation section is where you pull everything together, step through accepted valuation approaches and procedures, and work your way toward a sound conclusion of value at the enterprise equity level as well as the shareholder level. Along the way, Business Valuation Specialist keeps you on track by matching benefit streams to the appropriate level of value and makes sure the correct risk rates are applied. There are 14 items on the valuation menu. The first 3 groups contain the information that will be used throughout the valuation process, along with details about the specific assignment you're working on. Let's call this the information base, and we'll review this in a few moments. There's 1 group for the asset approach, 6 for the market approach, 2 items related to the income approach, and 2 items for working through approach level, enterprise level, and shareholder level conclusions of value. While on the topic of value levels, one of the common valuation errors is to mismatch different levels of value. BVS is configured to keep each method under each approach on the same level, that is, the enterprise level equity value. We'll drill down into each of these key elements in future sessions, but for now, let's start with an overview of the information base. The historic core data and projected financial information used in the valuation is summarized in one location. This is the information base. Because all the information is in one location, you don't need to waste time and avoid the distraction of menu jumping or sifting through Excel worksheet tabs. These multi-view buttons give you quick access to everything in the information base, including the historic and projected earnings, cash flows, and balance sheet data. The multi-views are also used throughout the entire valuation section to organize related screens. Here's where you identify the preparer of the valuation report. You can include items such as contact details and professional credentials. All of this information automatically flows into the valuation report. Use this screen to specify details about the valuation assignment. Enter the valuation date, report date, purpose of the valuation, standard of value used in the valuation, and client contact information. These details also automatically flow into the valuation report. This is the Benefit Stream Control panel. It lets you select all the options for the historic and projected benefit streams that will be used in the valuation methods under the income approach and the market approach. BVS will consistently apply the selected benefit stream in all income approach methods. Equity benefit streams result in equity values. Debt-free benefit streams result in invested capital values that are then converted to equity values. BVS keeps this straight for you by automatically performing the property equity conversion when they're applicable. If you're going to use weighted average earnings or cash flows, you can enter the weights to apply in each year. You can also select the benefit stream time frame that's most appropriate for your valuation. You have the flexibility to select different time frames for the income approach and the market approach. The ownership control screen is used to identify the common stock owners. For each owner, you can include the number of shares owned, the class of shares, voting rights, and other information. Information about prior transactions in the company's stock can be relevant in your valuation. Here you can list any past transactions that you've identified. Most methods in the market approach result in invested capital values, also known as debt-free values. If you select a debt-free benefit stream for the income approach, The resultant values will also be invested capital or debt-free values. In these cases, BVS automatically deducts the market value of interest-bearing debt to convert the invested capital values to equity values. For all valuation methods, the value of preferred stock is always deducted and the value of net non-operating assets is added to determine the enterprise-level equity value for common stock. Here you can value up to 10 different tranches of preferred stock based on your assumptions about the market yield and the actual dividends paid for each preferred tranche. For the market value of debt, you can adjust the interest rates to market rates at the date of the valuation. The market interest rates are used to determine the cost of debt in the weighted average cost of capital calculations. For any non-operating assets and liabilities, you can adjust each to its market value and then deduct any related costs and estimated income taxes on the gain or loss on disposal. BVS will automatically add the value of net non-operating assets in each valuation method. After you complete these screens, all of the foundational data is in place. You have control over the key variables, and BVS properly matches them so that all value indications result in the same level of value. Now you're ready to move on to the actual valuation approaches and methods. We'll look at the asset approach next. See you there.